Good morning, everyone. It is Monday, July 25th. Here we are. Huge week this week. We have the FOMC decision, and following the decision, of course, there'll be questions taken by the Fed chair. And then also this week, we have some of our biggest companies reporting, like Apple and Amazon and Google and Microsoft. Oh my! Yep, big week this week, and we will watch and see how it all plays out. It looks like we're starting out the week after having a pretty decent week last week. I'm removing some of these trend lines here. After moving pretty decently, we're starting to flag a little bit. Our inside candle being formed right now. But what I want to look at is that weekly candle, because that weekly kind of gives us a really nice picture of the overall market trend. Now, we did not put in all higher lows over the last several weeks, because 2 weeks ago we did have that dip. But last week we came in pretty solid, and we were able to get over this little shelf that we had right here at about 39.21, 39.25 area. We were able to push up above that inside the week. This is what it looked like. I'll put it on a little smaller time frame here. That we moved up and just we had a rough day on Thursday, but held in pretty nicely. Still managed a higher high, higher low, and now we'll see. Or sorry, this is Friday. We still managed to stay inside in that trend of higher highs, higher lows, and today we're opening up here.
Halted on code news pending.
I'm going to go ahead and mute the news for a minute. So that is a good look here. Well, now I can't get my charts to change. I hate when that happens. All right, so this is what the SPY looks like going into the session. A lot of uncertainty and how much, a lot of people talking about how much the Fed will raise or not raise. And, in the end, I'm not sure what the debate is for, because, well, might as well just wait and let it happen. But apparently it's a thing, so here we go. Also, the debate about whether or not we're in a recession, it keeps coming up. It's over and over and over. And here's the thing. There's a lot of indicators that, you can look at it technically. 2 contracting quarters of GDP. Well, that puts us in a recession. The Fed actually looks more at CPI and things like that. But again, all of those are backward looking, and we have a lot of conflicting messages. So don't overlay what all of the analysts are saying, in just that we're headed for a recession, or we are in a recession. Are we in a bear market? Yes. Are we a recessionary bear market? Maybe, but the market's still actually going up. A lot of competing numbers. They said, well, we had a week of initial claims that was 250 or above. That, then now that means that we're headed into a recession. Okay, but there's still almost 2 jobs for everybody who is out of a job. So again, a lot of conflicting messages. So stop trying to make the market go down. I know that we have a lot of perma bears, and I'm definitely more of a perma bull. I come right out and say that. But self-fulfilling prophecy here, there are ways where rates too low needed to be raised. Absolutely. Are there things that we can do that have made it harder on us as Americans? Absolutely. Open up, let some of that energy, the energy prices, although they're down 66 cents per gallon on a nationwide basis, they are still way higher than they need to be. But more importantly, not just for us filling up the gas pump, what does it mean for every item you buy? It has to get to a store somehow, and it's using energy. And not just in transportation, but probably in packaging. You can get me on a roll here, and so sorry about that. But there's a lot of things that we can do that we haven't really done. And just to say, well, because we've had contraction, we're in a bear market, or we are in a recession. You know what? If that's what you want to look at it as, okay. But the market, in the end, the market will tell us exactly what it wants to do. So trying to pick where it's going to go, it is a fool's errand. So stop trying to, pick tops or pick bottoms. Let the chart tell you, let price action ultimately tell you. Turn off all of that other news, and just enjoy the market for what it is. That's, it's a day-to-day game. So, like I said, lots of big earnings coming up, and we're seeing a nice move in the overall markets here. Here's the NASDAQ, a little bit more quiet, really tiny candle last week. This morning coming in and, still giving us a higher low. So this looks like potentially a bull flag setting up on the daily in the NASDAQ, but potentials here in the ES. I'm going to pull this out because I think this is an important thing to look at, right? This could still be a bear flag setup, right? So it's either going to go up or down. How's that? I'm going to tell you that it's going to go up or down. We just don't really know which way yet. On the weekly, a little bit on the bullish side, you can say, well, the 3 is starting to cross up over the 8. It's super early in the week. I mean, we're not even in our first open session. But if we continue to make higher high and higher low, well, then the bull case setup would happen. If we fail at some point this week and we put in a lower low, or we come back, I would say below that 39.20 area, I would say, well, this looks like a bear flag setup that's getting ready to pan out. But we don't know if it's a bull or bear flag until it's actually already become the bull or bear flag. So a lot of market indicators that we use, they're backward looking, right? Because they have to take the data, they're backward looking, and they're delayed. They are delayed. So don't let anybody else's opinion make you trade a certain way or another. Look at the price action and just be as unbiased as you possibly can be. Okay, so all of that being said, let's take a look at a few charts I'm watching for this week. I like Las Vegas Sands, LVS. It had some great catalysts last week. Let me see if I can put it on this chart because it's a little less messy. Hold on. Boom. Oh, good, this chart's deciding to play now. LVS, look at this. It had a huge monster run. On Friday, we put in this beautiful inside candle. Looks like a little bit of a doji here, and it was red on some lower volume. I like the look of this to continue on this morning. So I'm looking at the 819. So I know those are still a little bit short, but the 819 LVS 39, you could certainly push that to the 40 as well. Because I'm looking to enter around 39.65 or an opening range break. If these are opening up higher than the entry point listed, use an opening range break, whether it's 5-minute, 15-minute, or maybe 30-minute, probably the safest there. Use that as your entry. I'm going to stop at 38.66, and my targets are 40.55, 41.23, and 42.50. All right, so that is LVS. Apple is on here now. They do report this week amongst a lot of really big tech, big market cap names. But I love this look. It has some really nice strength. This does seem to have maybe turned a corner, an overall corner coming up over recent highs. And we know that as the SPY goes, so does Apple, because they are so, Apple is a very weighted position in the market. So with the earnings catalyst coming out, I'd be very cautious on what you do hold overnight. But I love this overall look here. We came in and we took a little bit of a break. Now the volume didn't drop off, so that might be a little bit of a bearish signal. But overall, Apple holding a lot of strength here. I like it at the 155 call, and I want to enter around 155.40. I'm going to stop at 154.09 and target. It's a little bit bigger of target, 158.69 and 162.04. SHOP entered the radar last week, and look at this, just messy, or I don't even want to say messy, just long consolidation accumulation. We've had really a lot more volume when you compare everything from the 5.5 forward versus backward, right? We had a few spikes, but for the most part, this has been trading much better. They also had a split in here, which makes it even more tradable just from a price point standpoint. So love this look. We moved up. We took a little bit of a break, headed into earnings. So you don't want to hold them through, or I wouldn't hold them through the earnings. But this looks like a nice little earnings catalyst setup as well. I like the 38 call. I'm going to enter around 39.40. Yep, you heard that right. It's an in-the-money call. And I'm going to stop around 37.30. My targets are 40.40, 41.37, 42.49. Then we hit this gap up here. See this gap right here? We're going to hit that gap. So kind of looking for those to play out. Some others I would still continue to keep an eye on. Boeing, Etsy, although this candle did close downside and it looks like a falling hammer, I would just keep an eye on this. It did move just with the overall market, but I think that looks like a good one here. Qualcomm above the 200. And we saw home builders actually do pretty well last week. I would have thought that they would have maybe moved downside, but after a long period here getting through a lot of their earnings, they have moved to the top side, so I like the look in there. On the opposite side, looking at ADM more as a downside play, it does have earnings tomorrow morning, so it just have to be a day trade here, but we'll see if it fails in 20. I like this for a downside, and the agricultural stocks have because the prices of agriculture itself has come down, these have started to come down with it. I still like CRM for a downside, but we'll see. A lot of these, I mean, they've been kind of fooling us, a lot of failed breakouts and a lot of failed breakdowns. So just keep an eye on that, but I like CRM to the downside as well. All right, if you have any questions, reach out, Heather C at GivingTreeTrading.com, and I will hopefully see you soon.